the Financial Survival Network. Now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. And everyone was watching Jay Powell's Friday speech and tightening. How long can it go on? How high can rates go? How high can Powell push rates before something really bad happens? A lot of bad things happening around the globe now. Let's take a look at it all with our good friend, John Rubino, founder of dollarcollapse.com. Hey, John, so I guess Powell made his speech. Can you believe him is the question.
Hey, Kerry. Well, this was a pretty big deal because since basically the 1990s, the financial markets have been trained to look for a particular pattern in the financial markets, which is, the Fed will try to tighten a little bit, stocks will tank, and then the Fed will step in and start easing again, and stocks will go back up. So, this year, the Fed tried to tighten a little bit. Stocks went down hard for the first 6 months of the year. And then everybody said, okay, this is it. We can buy back in again. And stocks started going back up. But the Fed never started easing. They never stopped tightening. And so this Friday, Powell made a speech in which he said, guys, we still have more tightening to do because inflation this time around is so much more serious. And he used phrases like "there will be pain" in the financial markets, and that really spooked everybody. So stocks just tanked on Friday. They're, as we're speaking now on Monday, they're down a little bit, but not a lot. But the tone in the market has changed dramatically because everybody realizes that the Fed has more to do. And actually, the Fed hadn't even started with QT, which is basically shrinking the money supply. They hadn't even started that yet, and that's supposed to start this month, where the Fed is going to run $75 billion a month off its balance sheet, which is, that's cumulatively over time a lot of money for those guys. So now we're in a very different kind of situation from the previous cycles, because the Fed is specifically saying it's going to have to inflict pain on the financial markets in order to stop people from spending so much money and stop companies from paying such high wages and stuff like that. They have to affect the real economy in some fundamental ways. And all of that means lower corporate earnings. So the next couple of earnings seasons will be probably, if the Fed has its way, they'll be brutal. And that'll affect stock prices. And so this is different. We don't know how long this is going to last, but the Fed is specifically saying that it's going to last longer than previous tightening cycles, and that there have to be some real economy and financial market effects before the Fed feels comfortable going back to easing again. So this might go on for a while. Now it's way less of a sure thing to be going long stocks based on what the Fed has been saying.
Mm-hmm. So risk on is back, huh?
Risk off is back.
Risk off.
Yeah.
Risk off.
Maybe. There's no way to know for sure about any of this, but all of a sudden, the people who say don't fight the Fed are on the wrong side of this if they're long. If you're not fighting the Fed, you should be short most financial assets. We don't know for sure about long-term bonds, what all this means, but equities, especially big tech and other kinds of growth stocks, are suddenly not the favorite assets in terms of Fed action.
Mm-hmm. So what do we do then? Basically, defensive stocks, consumer stocks, those aren't going to go down. One thing I find interesting, remember, 3-4 weeks ago, Jamie Dimon came out and said, there's going to be a problem. Basically the classic Houston, we have a problem. And that there was going to be pain involved. And gee, what a shock. A month later, Jay Powell kind of mirrors Jamie Dimon.
Yeah, the guys who make these decisions are sending us some pretty clear signals, which is that they see trouble ahead, And some of that trouble is going to be engineered by them for specific goals. So we need to watch those goals. Inflation has to come down now, apparently, according to the Fed. And, there are signs that that's already happening. But there are other signs that it's not going to happen for quite a while. Oil is back up in the 90s again. It was in the 80s last time you and I talked. Agriculture is a mess all around the world for supply chain reasons, and in a lot of cases for environmental reasons. There's like a global dust bowl thing happening here, which is kind of funny because a lot of people are talking about Great Depression 2.0 now. And in the first Great Depression, we had a completely unrelated climate catastrophe, which was a gigantic drought in the Southwest in the U.S. that basically wiped out thousands of farms and sent millions of people just, migrating to some place where it isn't all. Yeah, mostly California. Well, around the world, as we enter Great Depression 2.0, around the world, there is kind of a dust bowl evolving now where a lot of rivers are drying up and aquifers are basically just going away. Lake Powell and Lake Mead in the U.S. are shocking what's happening there. They're shrinking to levels really never before seen.
And dead bodies are popping.
I know, yeah.
Right
we're finding out we're solving a lot of murders. That's the only upside of the whole thing right now. But these lakes are dropping to the level of the pipes that ship water out of the lakes and to generators and to the river, which flows down to where the farmers get their water. And a lot of this stuff. I mean, if the hydroelectric generating capacity of the U.S. West is impaired, that's catastrophic. If water can't flow to farmers, that's catastrophic in a different way. Either way, it's really inflationary. So let food prices stay high, let the energy markets stay in turmoil, and the Fed does not have the ability to make inflation just go away with another, 200 basis points on the Fed funds rate or whatever. And that's the dilemma that faces them now. There are a lot of things going on in the world that they really have to address, but that cannot be addressed with monetary policy. So, you and I have been talking for years now about chaos. We're screwing up our finances to the point where, lots of bad things could happen, many of them self-contradictory or mutually contradictory. But the one thing that's guaranteed is volatility or chaos. Volatility is another word for chaos if it goes on too long. And that's what we're definitely seeing. So we don't know whether there's going to be, raging inflation next year or deflation. But we do know that it's going to be really messy, whatever it is. Because, achieving either of those things involves out of control sectors that the government cannot bring back into line. And we just don't know what it'll be. But we do know it'll be incredibly messy. And, it's not just the U.S., it's all around the world. The Yangtze River is drying up in China. Europe is having a climate crisis mixed with an energy crisis of their own making. They made themselves dependent on natural gas way prematurely. And now with the Ukraine war and sanctions on Russia, a lot of that natural gas is being cut off. And, as we've talked about, I think the last two times that you and I did a show, Germany is just, they're in such a mess that it's just shocking. They're literally telling their people to go out and get firewood and to, instead of taking a shower, just wipe off with a wet towel. This is Germany. You expect that kind of stuff from Italy or someplace, which you are also getting in Italy. They're having civil unrest because of inflation and because of some of the policies they're trying to implement in their agriculture sector. Same thing in the Netherlands. A place that you would never expect to be brought to its knees by civil unrest. That's what's happening with the farmers there. So wherever you look, anywhere in the world, there is a gigantic mess. Some of it is related to monetary policy mistakes. Some of it is related to climate. None of it is easily fixable.
I saw it was an article in Zero Hedge. People were lined up like for hours and hours in advance to buy coal.
Coal.
That dirty energy that puts out all sorts of greenhouse gases. It's dirty. It's soot. I mean, I thought we were done with coal, but evidently coal is seeing a resurgence and the coal stocks are up. Europe's energy crisis, well, Austria's largest energy supplier is insolvent. They need 1.7 billion euros to remain liquid, according to the local media. And then when you look, like you said, the problems that we've got weren't necessarily created by low interest rates or free money. There's fiscal and policy issues like energy that were largely created by them. And right now, as we speak, and it's Monday, August 29th, Henry Hub Nat Gas is at 9.75. It's kissing that $10 range. It's going to break that $10 range. It's been on a little consolidation move. It'll probably head up to 15, which is what we said all along. Right now, the per barrel equivalent of natural gas, meaning per barrel oil equivalent, is something like $400 or $600. Energy prices, electricity prices in Germany up to $1,000 a megawatt. So that is the equivalent of $1 per kilowatt hour. In the US, the average price is 15 cents. So you get an idea of what these electricity rates do to people. If you think you're paying a lot for electricity now, just be glad you're not in Europe.
Well, there are places in Europe where if this time last year your utility bill was, say, 250 euros per month, now it's 2,500 euros per month. So unless you had a lot of disposable income left over after paying bills last year, you're borderline bankrupt this year because, where do you find the extra 2,000 euros, which is, by the way, same thing as $2,000 right now. For the first time in a long time, the euro has plunged to parity with the dollar. And that's in large part related to the energy crisis over there. Who wants to hold the currency of a system that's going through what Europe is going through right now? And the answer is almost nobody. So they're converting their euros into other currencies as fast as possible. And the euro is plunging, which, by the way, is inflationary. If your currency goes down, everything you buy from overseas goes up in value or up in cost. So not only are they paying insane prices for energy, but all of their imports have just gone up by 30 or so percent in the last year. So yeah, Europe, they were always making stupid monetary mistakes, and their political system was always unfinished and therefore chaotic. But now they've got this massive energy crisis on top of those other things, which would have caused crises no matter what. So, yeah, it would be a surprise if the Eurozone survives the next few years in its current form. It might still be around next year or the year after, but it's going to be different than it is now. There will be some countries that are just not there anymore, or the terms of the currency union will have changed in fundamental ways. We'll see, but that's what happens when you design something badly and then run into real world trouble with it. It has to change to adapt to the real world, not the other way around.
And Milton Friedman predicted this. Right now, the US dollar is up to 108.78. It's almost at parity again. It was a couple of weeks ago. It was higher. I think it was at like 98 cents to the euro. Right now, it's almost a parity. It's between 1 and 101, so 100.5. That's close enough to parity to say it is. And you wonder how much higher this thing can go. Obviously, it gives the U.S. a lot of leeway because all that money is pouring in from Europe. But for how long will that be the case? And hey,
well, see, a currency that's too strong is also a problem. And that's what we're dealing with here, because now we're trying to sell stuff to the rest of the world, we're trying to sell things to the rest of the world. But when they leave the US, they're priced in dollars. So all of a sudden, everything we're trying to sell Europe or Japan is way more expensive than it used to be. So that hurts our multinationals. But by the way, all this crazy stuff that's going on now generates two investment strategies. One is to short the hell out of these these messed up financial markets in the US and Europe and Japan. The other is to buy uranium, because everybody in the world is now rethinking their shutdown of their nuclear plants or their lack of new building of nuclear power plants. Japan, for instance, after Fukushima, basically decided to move to solar and wind. And now they're having to go back and restart their nuclear plants. Same thing with Europe. And that means there's massive new demand coming online for uranium and nowhere near the supply that is needed. So uranium mines are suddenly a lot more valuable. The uranium mining stocks are, well, I've got them that I'm watching, and they're up 10% or so today. But that doesn't seem like the end of the run. You know, it could be one of those really long, spectacular runs, because it takes a long time to shift back to something like nuclear, because that's not something where you just flip a switch. You know, if you've mothballed a nuclear plant, you've got a lot of work on your hands to get that thing ready to go again. So this is a long-term trend that is highly unlikely to be derailed by anything, because I think, you know, not that the people in charge of most of the big countries are smart, but I don't think you have to be very smart to learn the lesson of the energy markets today, which is you need to diversify into things that you can count on. And nuclear, with all its flaws, can usually be counted on to continuously produce electricity. So there's your investment thesis: buy uranium and the related companies.
Yeah, so true. And the idea, some of these plants that have been mothballed, depending upon how badly they've been mothballed, might never see production again.
And here's another part of this. They require water, nuclear plants, to cool the rods.
Mhm.
And if the river that flows to a nuclear plant dries up, you can't run the nuclear plant either. And that's actually the case with some of Europe's nuclear plants, where they aren't getting enough water to run. So it doesn't matter if the government wants to restart them. So, you know, so we'll see. Multiple problems all feeding into each other around the world right now.
With no solution in sight. That's
So, yeah, some of these things you got to wait for nature to fix them. And, you know, as we know from the Dust Bowl, sometimes it takes a long time before things go back to normal.
is very, very true. Well, yeah, how do you refill Lake Mead? There's nothing, tax cut isn't going to work on that. A rate cut's not going to work, a rate increase. Yeah, like nature does not respond to rate increases, right?
You're right. There is no magic interest rate that refills Lake Mead. And, you know, in a financialized world, that's something that people don't completely understand. They think everything can be fixed with, you know, another 10% of newly created currency, right? And some things cannot be fixed by new money, and in fact are made worse by excess money creation. So, you know, a lot of hard lessons being learned out there right now by a lot of really dumb people, and you know, we'll see how they react to it.
We'll see how they learn. So they'll either learn or perish in their perpetual state of ignorance, because so much of this was foreseeable. Obviously, water levels, droughts, things like that, we don't have a lot of control over, although the certain parties would say that it's all climate change induced. You could reserve opinion on that.
You know, there have been droughts and earthquakes and volcanoes and hurricanes for as long as there's been a planet. So we should build climate or weather crises into our planning, right? I mean, you know, if you're in Miami, you need a plan for when that Cat 5 hurricane hits. And if you're on the West Coast, you know, the big earthquake is coming. You need to be prepared for it. That's just the kind of thing that is eventually going to happen. And, you know, same thing with droughts. There are droughts over and over again throughout human history. And like the Dust Bowl that we were talking about, that was pre-climate change, but it was a monstrous drought. And then before that, there was the little ice age where, you know, for 5 years in Europe, there was no summer and the rivers all froze and everything. Yeah, so stuff like that's always going to happen.
Yeah.
So yeah, like you said, we don't need to attribute it to man-made climate change, but we do need to build it into our planning as something that is inevitably going to happen um, at one time or another in one place or another. Stuff like that is just part of the nature of a complex planet. And so we're seeing, whether we're causing it or whether it's just part of what was going to happen in any event, we're seeing a lot of wild weather related stuff out there that that was unplanned for. We don't have a plan B for a lot of this stuff. We
Yeah.
just have to wait till it goes away.
Hey, well, interesting, the droughts here, the droughts in China, the Yangtze River, all their hydro plants are like not producing. They've had to do electricity rationing there, a lot of things. Again, hey, they spent trillions of dollars building dams over the past 40 years in China, and it's basically done nothing for them. It doesn't stop the flooding. In fact, there's arguments that it's made it worse, and it doesn't stop the droughts. There's arguments that that's made it worse. So, in any event, hey, one other thing I think we need to discuss, and that is the raid on Trump's house in Mar-a-Lago in Palm Beach, Florida, not too far from where I live. Like, it's like if they want you to forget about Trump, why are they always keeping him in the news? He's not, last I looked, he wasn't president anymore. And, the idea that you're going to criminalize behavior, well, then our last 10 or 12 presidents all should have been behind bars, right?
Wouldn't that be a fun prospect? Yeah, but I think we can completely discount the idea that this is legitimate police work. Okay, this was clearly a political move, and it was either incredibly stupid or pretty smart, depending on what the goal is. If they were just trying to get rid of Trump, this didn't work because it made him a victim and has energized his base. And now, where he might have had a bit of a battle in a primary, now probably he can be renominated very easily because of this raid. In which case, if they were trying to get rid of him, it was stupid. But if they were trying to get rid of Ron DeSantis, it was actually pretty smart because now, if the Democrats were really worried about Ron DeSantis as the next president, which they should be, he'd be much more of a nightmare for them than Trump would be. And the Democrats are trying to make sure Trump is the one they're running against next time around. Then, okay, you got to give them credit for some, forward-thinking corruption there. Because this probably does raise the odds of Trump being the next nominee that the Democrats have to run against. So, we'll see. Whenever you're in the "are they stupid or are they evil geniuses" argument with the guys in charge, there's always evidence for both of those things, and you never know for sure. But I do think the net result of this is that it's more likely that Trump is the next Republican nominee for president in 2024.
So, the last guy who actually served 2 non-consecutive terms in the White House was Grover Cleveland. And
oh, yeah. I was going to say Teddy Roosevelt, but you're right. Yeah.
And I believe he was from upstate New York, if I'm not mistaken. And the guy he was running against, well, he was basically running against Tammany Hall, which was maybe the deep state of its day. And won the first election, lost the second. Then they saw how bad the next guy was, who I don't remember who he was. But after that, they reelected him in 1892. We could, Benjamin Harrison, that's who it was. And he was the Democrat. But he was, by all accounts, an ethical guy. Benjamin Harrison, I think he died a month into office. He was a little too much into partying. And then we got the next guy after Benjamin Harrison, so which I don't remember. Don't ask me who it was, but he's there's definitely parallels to what we're seeing now. The parties are reversed, but the actual players and their policies really haven't changed.
And you know what's even more bizarre about this is that there's an outside chance of the Democrats resurrecting Hillary Clinton to run against Trump. So the whole thing can repeat again. God. In the middle of some kind of a gigantic financial crisis slash inflation spiral slash environmental crisis. I think I just want to go camp in the mountains for the next 2 years and just not be connected to any of this, because it's going to be each morning you're going to wake up and pull up your Twitter feed or whatever, and it's just going to be nightmarish. So.
Yeah, that's pretty wild. But hey, interesting times ahead. That's for sure. Gold doesn't seem to be doing very much. We'll see what happens after everything goes crazy here and people really comprehend how precarious this thing is.
Yeah. Well, precious metals prices are just languishing right now.
Yeah.
As I guess, makes sense because it's the slow seasonal part of the gold market when nobody's paying attention to it anyhow. And, what do you do? Should you be buying it or should you be selling it at this point? No, nobody really knows. But at the same time that's happening, a lot of bullion is being taken off the COMEX and the other exchanges. And the amount of bullion that's available for future contract delivery demands is shrinking dramatically. So it's kind of setting up for some dramatic moves in the exchanges, and we'll see. But it could be kind of a short squeeze-ish thing that happens if there just isn't enough bullion there. And I know people have been talking about that for a long time, but we're getting kind of a structural setup for that just as we head into the stronger season for precious metals. So there could be some action to make up for the boredom of the last few months.
A commercial signal fail. Yeah, we are definitely heading into the more seasonal positive part of the year for precious metals. Doesn't mean they go up every year in the fourth Q4 and Q1, but the odds are good that they will. There's a lot of reasons for it, not to mention dowries in India. I don't think India has given up on gold yet. And it seems like every central bank out there is accumulating more, as are the Chinese and the Russians. So whether it's going to do the Russians any good or not, we will see about that. But it might be the only way they can wind up buying stuff from China is with gold. And that'll make an interesting dynamic.
Russia has to put all the money it's making from that sanctioned oil that they're selling for such high prices around the world right now. So I imagine they are putting some of it into gold.
Yeah, no doubt. We know they have a fondness for it. And and we should mention that after 6 months, the war drags on. We probably know as much about what's going on there now as we did 6 months ago, which is very little other than what the propaganda outlets released to us. But one thing we do know is that war is still going on, and it was supposed to be over in a matter of days, right?
Yeah. It's turning out to be a lot more complex than probably Putin thought at the time. But in the end, it's working out for Russia. They're making a lot of money on this whole thing. So
they're
we'll
spending a lot too.
Yeah, they are spending a lot, but they're the government finances seem to be improving based on what they're reporting, and they're 'cause the thing about oil is you can't really sanction it because it's fungible.
No.
So once it's out there, there's no way to tell whether that was Russian oil, and you need to be penalized for buying it or whatever. So they can still sell what they're selling on the open markets, but at a higher price now because it's like $93 a barrel official price right now, and that's way higher than the average of the last few years. So the oil exporting countries are doing very well with all this chaos that's happening right now.
Any chaos is going to make commodity prices go up in the area, the chaos around the globe. So it is interesting to see. Well, in any event, that is it for today. We'll be back in a couple of weeks. John, where do we find you these days? What are you doing?
I'm wandering aimlessly around the world right now, Kerry,
Uh-huh.
enjoying my sabbatical and playing this sport called pickleball
Oh,
that
pickleball.
that is
Yes.
really addictive. It's like tennis for old people, and it's a blast. So I'm doing that. So on the days when I'm able to walk around and I'm not too sore from trying to do sports now,
Mhm.
it's it's a nice life.
All right.
But
Pickleball.
I sold, yeah, I sold my website, dollarclaps.com, to people who are doing a good job of running it. So that go there. There's still plenty of information about the stuff that we just talked about, updated continuously.
All right. Well, we like that. All right. Well, hey, go over to Dollar Collapse, go over to financialsurvivalnetwork.com, sign up for your free newsletters. John, we'll talk to you in a couple weeks. If you've got a question for John, though, you can shoot me an email, kl@kerrylutz.com. We'll get you an answer. Hey, keep up that pickleball, and maybe the next time you come to Florida, we'll have a match.
Excellent. All right. See you.